Okay, there you go. Recording has started, and let's have a look at this document that I've got on the screen so long. Okay, that's working. Oh, just ignore these dates on this document here. I will update that before I upload it for you guys. It was just also that these documents weren't loading and I couldn't, I wasn't able to update these dates. So just ignore that part. And this over here, we get that out of the way because so I don't confuse anybody with that due date. Okay, so the first part that I want to just go over and remind everybody with, for you guys online as well as those that will listen to this afterwards, these couple of items here in blue are the ones where students often, common places where students lose marks unnecessarily. So again, just a reminder that referencing is required, even though this is accounting, but you only need to reference where there are any paragraph type questions where you have to go and look at actual theory either in your textbook or online or somewhere. And I don't think there's much of that in this textbook. There's really, if I remember, textbook, this assignment, there's really only that one question, 1.1, excuse me, that I think you're going to have to reference, and some parts in question 3 that you will have to reference. Question 4 is all filling in journal, so that doesn't have to be referenced at all. And also question 5 is also the first part you don't have to reference, but there are a couple of questions, really only 5.2 in question 5 that you have to reference. But you'll recognize which ones you have to reference. If the question says discuss or explain or in your own words, or for instance here it says name the 2 ways and give a brief explanation. So any question that has that type of requirement, that then requires you to go and do some research in your textbook or online, and that you will reference. If you've got to fill in tables with true or falses or do calculations or complete Okay, am I back? Sorry, the internet looked like it conked out. I hope that you guys can hear me. Okay, I hope you can hear me. It's still saying that it's not responding at the top, but it looks like I'm connected at the bottom. So the third bullet point, highlight and follow all instructions given in the required very carefully. That one, I can't tell you how often students don't answer questions correctly because they have misread the required, or they've read it quickly and then they've done something different, or they've left out a section that was asked of them in the required. So when you finish the question, go back to the required and read it again and make sure that you have completed everything that they've asked for in the required, and that you did precisely what you followed those instructions carefully. So the fourth bullet point is along the same lines. Double check that you are answering questions correctly. Oh gosh, I don't know what happened there. It looks like I disappeared. Hopefully I'm back again now. I hope it's not going to do this all evening. Okay, so could you guys hear me when I was just discussing these bullet points here? Highlight and follow all instructions and double check that you're answering exactly what was asked for. The bullet point 3 and 4, oh, you could. Oh, thank goodness. bullet point 3 and 4, those two go together and they really are important, which is why I put them right at the top of this document and spend some time on it, because honestly, students constantly lose marks just because of that. Then the next one, please show all of your workings. So wherever you've had to do a calculation, where you are answering your question, just underneath your table with your answers, just give us the calculation that you've done. Because if you do that, I can always give you working marks if you show your calculations. But if you haven't shown your calculations and you've just written down a wrong answer, then I won't be able to give you any marks for the question at all. So often I can give you award some marks if you've, as long as you've shown your workings. And it's also important for you to do that so that I can see what you've done. Are you on the right track? Or if you've got a wrong answer, I can't even tell you what it is that you've done wrong because I can't see what your calculation was. And then the last bullet point is just applicable to theory questions. Again, if a question's for 5 marks, you must make sure that you've given 5 separate valid points and in order to earn the 5 marks. And also, if something is only for 2 marks, then you don't need to write half a page. So always just watch that from a time point of view and always make sure that you've written enough for the amount of marks allocated to the question, but not too much. So then this document that I call the lesson plan, what I do on this document is I just list some places in your textbook that you can go to find some help with these particular questions. So our question 1, which is for 15 marks, this is mostly from Learning Unit 3 VAT and source documents. And remember, we're doing assignment 2 now. So our assignment 2 is Learning Unit 3 and 4. So for question 1.1, and I'll put the question paper up on the screen in a minute so that we can have a look at it. That one is a theory question. They say name the 2 ways or the 2 bases that a company can, on which a company can register for VAT. This question, I can't tell you how many times students misinterpret it, and they think that they're asking for one thing when they haven't read the question carefully. So this is one of those questions. Please make sure they say name. There are 2 ways or 2 bases in which a company can register for VAT. They're not asking you what are the requirements for a company to legally have to register for VAT. So you'll find this, it is one of your learning objectives for Learning Unit 3. So go and have a look at your learning objectives, and in your learning objectives, you will find the answer, and you'll find it also in section 3.4 in your textbooks on page 83. That is where the section, that's the section that they are referring to when they are asking this question. Okay. Then your question 1.2 is a really nice question. Which VAT supplier categories will apply for each scenario below? And then they give us 4 separate scenarios and give a reason for your answer. And then also a third request, tell us whether input VAT can be claimed or not for that specific item. So there's 3 things you need to state for each of the bullet points. Which VAT supplier category does it fall under? Why did you choose that category? And can the company claim input VAT on that particular transaction? So again, carefully read the required and then have a look at the 4 different scenarios. So for this section here, you'll find the information in section 3.3 of Learning Unit 3 on page 80. So on page 80 is where we have that whole discussion on the different VAT supplier categories. And then because they are specifically referring to white bread and white bread flour and brown bread in all 4 of these bullet points, you can also use this link that I have given you on this document. which will give you further information than the textbook gives you. And this is specifically for the second scenario on white bread flour, because I think it was 2 years ago, the rules for which items are VAT exempt and which ones you can claim VAT on were changed. So in your textbook, you'll find the general categories, but you won't find specifically white bread flour, and white bread mentioned. So you will need to do a little bit of research, extra research for that question. So I've given you a link to help you there. So that question also, it's a simple looking question, but you need to be very careful. Be very careful that you read everything correctly, including the description of each of those scenarios. Then for our second question, which is also 15 marks, this is all calculations. Question 2.2 says calculate the missing amounts. So we've got from A to L, and show all of your workings for each calculation. And they want us to round to 2 decimal places and ignore VAT. So this question is only markup on cost and markup on selling calculations. So you either have to work out the cost price, the profit, or the selling price, or the gross margin percentage. So just remember, please, again, read the question carefully, ignore VAT. So in this question, we are pretending that VAT doesn't exist. We're only working with cost prices and selling prices excluding VAT. I'll come back to a description of calculations when we look at the actual paper itself. And also, guys, go and have a look in your announcements. A couple of weeks ago, I posted a tutorial letter in your announcement specifically giving you more precise explanations of markup on cost versus markup on selling price, and that will help you with this question 2.1. And then in this little description here, I've also given you different sections in the textbook where you'll find the calculations and the explanations, and also which examples you can use to go and revise these calculations to make sure that you've got them right. Okay, so the support that I've posted, you've got them, and I've described them in previous collabs. So this is the most important thing to remember with this question. First of all, and I'm going to type in the chat box. I hope it's not going to kick me out if I go there, because I didn't like that just now when I tried to do it. Okay, for some reason, okay, I can't get into the chat box. But what I wanted to say is there are certain things that you have to remember with this one. So remember, we've got one basic equation that you must remember. The equation stays the same. It's identical regardless of whether the company is marking up on cost or marking up on selling price. And that is that our equation is cost plus the profit equals selling price. So that equation will never differ. Cost plus profit has to be added together. Those two amounts must be added together to arrive at the selling price. And then, of course, in this little table, sometimes they've given you the selling price. So that in that case, selling price minus profit equals cost, or selling price minus cost equals profit. You might have to do it one of those way rounds. Okay. The profit, that rand value, is always going to be calculated either as a percentage of the cost price, or it's going to be calculated as a percentage of the selling price. But let's say, for instance, we have got a cost of 100 Rand, and our markup is 50 Rand, which would make our selling price 150 Rand. Okay. The profit of 50 Rand is going to stay 50 Rand regardless of whether we express the profit as a percentage of the cost or whether we express the profit as a percentage of the selling price. The only thing that changes is the quantum of the percentage. So if we say 50 Rand as a percentage of 100 Rand, how much is that? If we remember, we said our cost is 100, our profit is 50 Rand. So 100 plus 50 equals 150 Rand. So if I now want to express the profit or the markup, and I can say that what percentage is the markup on cost? What percentage is 50 Rand of 100 Rand? How much is that? Yes. Okay. So in this instance, we are saying the markup on cost is 50%. Okay. You got that? What happens if we say express the profit or the markup as a percentage of the selling price? Then what would our percentage be? What percentage is 50 Rand of 150? What percent, what's the answer if we say 50 over 150? Nobody got their calculator on there? Yes, 33%, yeah? 50 over 150 is 33%. So can you see how that changes? It's still 100 Rand plus 50 Rand equals 150 Rand. But markup on selling is 33% and markup on cost is 50%. Okay, so try and remember that example. Our formula, cost plus profit equals selling price, remains identical regardless of whether we are expressing the profit as a percentage of cost or as a percentage of the selling price. And the only difference is that some companies prefer to work out profit as a percentage of cost, and other companies, depending on what industry you're in, prefer to work out the profit as a percentage of their selling price. So it's just two different ways of looking at how a company measures their profit in their particular business. The reason I'm taking a little bit of time over that one is because this is consistently an area that the students seem to get horribly muddled up with. But remember, if you break it down into its basic foundational calculations and you understand what it is that we're calculating, what is it I'm trying to do or express, then you'll never get it wrong again. Everyone okay with that? Any questions on those calculations? Everybody happy with that? Okay. And if you're not happy, you can come back and listen to this recording again. It will be there for you as well as in previous collabs and in that one announcement that I posted where I described it at length. And of course, it's in your textbook as well, don't forget. Okay, so that question is for 15 marks. And if you're careful, and you work out each of those amounts carefully, you will definitely get all 15 marks. And then always just double check yourself. When you've calculated the missing amounts for each of those missing letters, then check with the answers you've written down, cost that you've written down plus the profit that you've written down, does it equal the selling price that you've written down? And then check your percentages, the markup percentages, that percentage that they've given you. Just double check, is the profit that percentage either of cost or of selling price, depending which way round they asked you. Then our question 3 is also, we're sticking with Learning Unit 3 with this question as well. Also a VAT question. And remember, I told you in the last collab, you guys must go and find yourselves either a full tax invoice or an abridged tax invoice. So that you need a real life, genuine, original invoice, because you have to scan it in and paste it onto the page of your assignment where you're answering question 3, so that I can see which invoice you are using to answer these questions in question 3. So for question 3.1 to 3.4, section 3.5.1 in your textbooks, which is where they discuss tax invoices, on page 84, on page 84, and then on page 85, they've got an example of an actual tax invoice with all of those little explanations in little call-out bubbles around it. So have a look at page 85 when you're doing this question, and that you should find that helpful. Okay. So again, I've put the reminder here. You have to use a real invoice to do this. And I know I did have some students last time that weren't in South Africa. They're foreign students. If you are a foreign student, you can use an invoice from wherever you happen to be. There is VAT in most countries, particularly the African countries. UK's got VAT. Most countries have sales tax, so you can use any invoice to do that, but it must be a genuine invoice. Please do not download an invoice off the internet and paste it in. I had some students doing that last time, and they just downloaded some random invoice off an internet website that was in dollars and then proceeded to answer the question. So if you do that, you will get 0, because if you look at your question paper, it does tell you, or is it in, oh, there we go, right at the top, it says answers without an invoice will not be marked. So if I see that the students are just using some bogus invoice because they did it last thing at 8 o'clock on the due date, then I won't be able to give you any marks for those questions. Okay, so that's question 3.1 to 3.4. And then question 3.5 is a little table that you have to complete. And that's just testing to see that you understand the difference between input VAT and output VAT. When do we use input VAT and when do we use output VAT, and which one is an asset, which one is a current liability, and also which one increases on the debit side and which one increases on the credit side. So just remember your little dead click rules for that. Remember your dead click. I still can't get into the chat, and I really like to use the chat when I'm on Colab. So just please forgive me for not being interactive there this evening, but it's just not allowing me to click into there at all. And I don't want to keep trying in case it kicks me off again. Okay, so question 3 should be quite straightforward. Then your question 4, which is getting to be one of the longer ones, this is for 35 marks. Now we're moving on to Learning Unit 4, recording cash transactions in your cash books. So your 3 cash books that are covered in Learning Unit 4 are your cash book receipts, your cash book payments, and your petty cash journal. Those 3 journals are the ones that we use when the company has a transaction that takes place as a cash transaction. And when we refer to it as a cash transaction, we mean as opposed to a credit transaction, which means the person didn't pay us straight away. We let them buy on account and they're going to pay us later, or we didn't purchase from our supplier. We didn't pay our supplier straight away when we bought the goods. We were only going to pay them later when we pay our account. Those are credit transactions, which we do in the next chapter, Learning Unit 5. Okay, so Learning Unit 4 only goes up as far as actual cash, which means if we purchased goods, we paid for them straight away. And when our customers purchase goods from us, they pay us straight away. And then anything else that the company undertakes as a transaction is takes place as a cash transaction. Cash changes hands at the time of the transaction taking place. So in your textbooks for question 4.1, you can have a look at question 4.3 in your textbooks on page 111, and at question 4.6 in your textbooks on page 125. Those two, because remember in your textbooks, you've got the question with all the transactions and you've got the solutions in the textbook. So you can use these 2 questions, look at the transactions, look at the solutions. They're similar to the assignment questions, so you'll be able to follow those solutions to see what you should be doing and how those transactions are entered into the journals. So just remember for this question 4, our business is a registered VAT vendor and they also only trade with other registered VAT vendors. So there is 15% VAT included on all purchases and all sales unless VAT is not applicable. So under what circumstances, what kind of examples or when would VAT not be applicable? When would VAT not be applicable? If a business is buying and selling goods, what type of transactions might we undertake in our business that VAT would not be included in that particular transaction? Can anybody think? Remember, I can't think of the page. Get to the page number now. Go to page 80 in your textbooks, 80, and that will give you a clue. So what type of transactions? Yes, exactly. Fuel, or if you purchased fuel or petrol, there would be no VAT included in that transaction. And that's because fuel is what? Petrol and fuel is a? Can you remember? Petrol and fuel is 0 rated, yeah. So on any 0 rated items that a business purchases, there will be no VAT in that transaction. So your VAT column in your cash books will be blank, and the amount that you've got in the bank column and in the expense column, either the expense column or in the sundries column, if there isn't a separate column for that particular expense, will be the identical amounts because we didn't have to separate VAT out from the excluding VAT part of the transaction. And that would also go for any exempt supplies and also any non-allowable items. So the difference between VAT not being applicable in a 0 rated or an exempt supply as opposed to a non-allowable item is that in a transaction where we've purchased something that's 0 rated or that's exempt, there will be no VAT on our invoice from our supplier at all because it's 0 rated or exempt. If we've purchased an item that is a non-allowable item, it means, yes, there will be VAT included on our supplier's invoice. Let's say we've purchased an entertainment type expense. We bought pizzas for the staff to entertain them. We would have paid VAT on that purchase, but because it's an entertainment type item, we're not allowed to claim the VAT back. So your input VAT column must stay blank, and the total amount of the purchase will go in the bank column as well as in the expense, in the sundry column under expenses, where you've called it staff entertainment or something to that effect. Okay, so just remember that. So this question, although this question is on Learning Unit 4, which is recording transactions in your journals, your Learning Unit 3 is very applicable. So that's why we first learn about VAT, and only after we've learned about VAT in Learning Unit 3 can we go on to 4 and 5, where we then learn how to enter transactions into our journals, because we need to know the VAT rules before we can do that. Okay, so then I'll give you some other places in your textbook where you can go and find information on there as well. So in your question 4.2, that's the one, question 4.2 is the one where they want you to enter the transactions into the cash book payments. Question 4.1, you have to analyze, there are 4 receipts, and they want you to analyze them under the accounting equation. So that's going back to what we did earlier in the semester. Question 4.2. So also don't forget about VAT. VAT is also applicable in 4.1 because VAT is one of our general ledger accounts. So we must include it if it's applicable in our cash receipts. And then in 4.2 is the cash book payments. So in 4.2, you have to identify correctly from that list of transactions which ones belong in your cash book payments. So remember, carefully choose which ones are payments, and then the same for 4.3, where you've got to enter the transactions in the petty cash. You've got to go through that whole list of transactions and make sure you correctly identify which of those transactions belong in the petty cash journal. Okay, so again, you've got lots of examples in your textbook to follow with those. And if you look at the solutions, the examples and the solutions for these relevant questions, then you'll be able to follow those, exactly what you need to do. But that will take time, so please give yourself plenty of time to do that question so you can do it slowly and carefully. And you don't have to do a last-minute rush and perhaps leave stuff out. And then the last question for 25 marks is also Learning Unit 4, our recording cash transactions. And with this one, for question 5.1, they have given you the month-end totals line of the cash book receipts and the cash book payments of the business. And they have again left the total in the bank column blank. So they want you to work out what the Rand value in the bank column should be for those 2 cash books for question 5.1. And then for 5.2 is a little short theory question. And then question 5.3 and 5.4, these 2, please again read very carefully. Why did I say 4 accounts? Let me just turn the page over here. Oh, yes. So 5.3, 5.4 and 5.5 and 5.6. They have given us 4 general ledger account names, that being bank, the T account for bank, for trading inventory, for capital, and for sales. So when we say we want the general ledger account, we are talking about the T account. Remember, that's the one that's got, how does it go? Document, date, details, amount on the left-hand side, and sorry, not document number. It's I can never remember, folio comes before or after the details. It's date, folio, details, amount on the left-hand side, date, folio, details, amount on the right-hand side. Left-hand side being the debits and the right-hand side being the credits. The name of the account goes across the top, and we've got a line going down the center, which is why we call it the T account. Okay, so just remember, go and research, make sure you understand exactly which one the general ledger T account is, so that you are giving your answer in the correct format. And then they want you to use those totals that they've given you at the top of question 5 for the 2 cash books to then complete these 4 accounts. Because remember what we do at the end of a month, when we've totaled all of our journals at the end of a month, we then post those totals into our general ledger account. So that's what they want you to do. Always remember your opening balances. So every T account always starts with an opening balance. And then after recording the opening balance, we then record the totals that are being posted into that account for the current month. And then when we finished posting the totals from the journals, we then balance the account. And they want us to balance all of the accounts properly at the end of the month, which means that you must total the T account when you finished your postings and work out what the balance brought down is going to be for the beginning of the new month. So in your textbooks, let me just see, is this page 128? The rules for balancing an account are start on page 127 in your textbook. So if you look on page 126 in your textbook, the structure of the general ledger and the rules of posting. So that's what you're going to use for these 4 questions here. And then on page 128, there is an example for each of those different versions of balancing the account at the end of the month, depending on how many transactions that the account has got in it. But you will, if you go to page 128 and you go to trading inventory, your accounts should all look like that, if I remember correctly. Because bank, you'll have debits and credits on bank. Your trading inventory, you will have a debits and credits. Your capital account, can't remember that one if it's got debits and credits. Opening balance. Okay. All right, so these sections here from page 126 to page 128, go and read through that carefully, practice with those examples, and then do these 4 questions. Okay, so this is what I call the little cheat sheet, because I've given you places in the textbook where you can go to find help with all of the questions, and I will post this for you so that you've got those to work with. Okay, so now hopefully the system's going to allow me to bring up the question paper, and we can have a quick look at that. And then we've pretty much covered most things. And I think we did have a look at some of the questions in our last collab as well. But then if there's anything else that you want to ask me, just go to the next page. Okay, so far, everybody's been very quiet this evening. I know, Ulrich, it's because you've got slow internet. Question 3, let me just go and have a look. Ulrich says for question 3, can we take a slip from any business, for example, a local restaurant's pay slip? No. Why could you not take a pay slip? If you go to question 3, and they say obtain a full or abridged tax invoice. I'm not sure if you're asking a pay slip. In other words, if you're saying if you are, say you work as a waiter at a restaurant and they give you a pay slip at the end of each week, is that what you're talking about? That kind of a pay slip? Remember, yeah, a pay slip is something different to a tax invoice. Yeah, okay. So from a restaurant, if you wanted to use a restaurant, you would use the bill that the restaurant gave you at the end of your meal. That's the tax invoice. Okay, good. Good question. It's easy to get muddled up. Anyone else want to clarify anything? Anything else they battling with? Okay, so let's just take a quick look at the question paper. We've gone through most of this already. I just want to keep that with me so I can see what I'm doing. Okay, so your question 1.1, as long as you read the question carefully, those 5 marks you'll definitely get. Okay, and remember, go and have a look at those page numbers in the textbook I told you to reference, and then you definitely won't misinterpret that question 1.1. So question 1.2, this is where we've got the 4 different scenarios, and you need to answer the 3 different things. Number 1, which VAT supply category will apply? Number 2, you must give a reason why you chose that VAT supply category. And number 3, also, can input VAT be claimed or not? Okay, so for each of these, you must make sure you answer each of those 3 parts of the question. So just read these carefully. So we are a tuck shop, and we purchase bread and flour to use in our tuck shop. And we must assume that both the tuck shop and the shops that we purchase our bread and flour from are both VAT vendors. So in other words, VAT is applicable in all of the transactions. Sorry, I shouldn't use the word applicable. The purchaser and the seller are VAT vendors. So VAT will be relevant except in where VAT is not applicable. So remember, VAT won't be applicable if it's a 0 rated or exempt item, or if VAT is non-allowable. So that's what you've got to identify. So there'll be 2 things that you've got to work with here. What was the I can't use the word commodity. What was the item that was purchased? So white bread flour, brown bread, and white bread. Those are the 4 different items that we purchased. So in some of those cases, VAT will be applicable. In some of them, VAT won't be applicable. And then the second thing that you've got to look at to decide whether we can claim the VAT or not is, what did the tuck shop use that item for? So Here they used it to make sandwiches for resale. So they used it as part of their business operations. In the second scenario, they used the white bread flour also to make muffins to resell. In the third one, we've got brown bread also to make sandwiches to resell. And then in the fourth instance, it's white bread, but in this case, they were making the sandwiches for consumption by their own staff. So in each of these scenarios, there's two things that you've got to look at. What was the item we purchased? Is that applicable to that particular item or not? And secondly, what did they use that item for? And in those circumstances, is that applicable or not? Okay. Any questions? So this set question 2, I gave you quite a thorough explanation when we went through the other document. So in this first column, they've given you the markup percentage. So this markup percentage is either going to be the markup percentage of the profit expressed as a percentage of the cost, or it is going to be the markup of the profit expressed as a percentage of the selling price. Okay, so remember what I told you just now, our little equation stays the same. Cost plus profit equals selling price. And all we're doing is expressing that same rand value of profit either as a percentage of the cost price or as a percentage of the selling price. So depending on which way round we're doing it, our calculations for the missing amounts will then depend on whether it's a percentage of cost or a percentage of selling. So go and have a look at that announcement that I sent you. I've given you the detailed calculations for that. And then this question 2.2, I want you to think about this one yourself. What is the percentage? What is the markup percentage on a product if the corresponding gross margin is 75%? So remember gross margin, when we talk about a gross margin, what percentage are we talking about there? Gross margin percentage is the percentage of what expressed as a percentage of what? When we say gross margin. Gosh, I really can't understand why I can't get into the chat box. Oh. Gross margin percentage, what's our calculation for gross margin percentage? When we use that wording, gross margin percentage, which of these two markups are we talking about? If you go to your textbook, it tells you gross margin percentage, also called, which one is it? Gross margin percentage is also known as either markup on cost or markup on selling price. Which one? Can you guys remember? When we use the terminology gross margin percentage, that's just different terminology for which of these two calculations? Nobody remember? Markup percentage on cost or on selling? Gross margin percentage, is that markup percentage on the cost price or the markup percentage on the selling price? Try the other one. You can only, yes, it's the markup on the selling. When we use the terminology gross margin percentage, it's another way of saying markup on selling price. So sometimes the question will say calculate the markup on the selling price, or it will say calculate the gross margin percentage. Both of those is the identical calculation. It's expressing the profit as a percentage of the selling price. So if you have a look at these two questions here where they've asked for the gross margin percentage, you'll see both of them are where this percentage that they've given us is where we are going to express the profit as a percentage of the cost. Okay, and then this one here as well is where we are going to express the profit as a percentage of the cost. So this percentage, 25 and 30%, is the profit expressed as a percentage of the cost price. So once you've calculated these missing items here, A and B and F and G, and you've got all of those rand values, they then want you to calculate the profit as a percentage of the selling price. The profit as a percentage of the selling price for C and H. Okay, remember, just like the example that I did with you just now, where I said if the cost is 100 and the profit is 50%, and our selling price is 150, and we said that markup on cost was 50%, but the markup on selling was 33%. So same rand values, but two different percentages, depending on whether we are expressing the profit as a percentage of cost or the profit as a percentage of the selling price. Okay, so that's what those two, this is what this question is, making sure that you understand the difference between those two ways of expressing the profit. Okay, and this question 2.2 is basically doing the same thing. It's making sure you understand the difference. If the markup percentage, what is the markup percentage on a product if the gross margin is 75%? So here they should actually have, just see if this is going to work. They should really have included, this should say markup, why has that gone away? This should say markup. Sorry guys, I'm just trying to get this to fit in here properly. What is the markup on cost percentage? Okay, 2.2. 2.2. What is the markup on cost percentage on a product if the gross margin is 75%? Okay, that makes better sense if I word it like that, round to 2 decimal places. Then your question 3, this one about the invoice, tax invoice that you're going to either scan or take a photograph with your cell phone and then paste it into your Word document so I can see it, and then you're going to answer these first 4 questions, very self-explanatory. And then the 3.5 is also very self-explanatory. Just draw up the same table in your Word document and then decide, is input VAT a current asset or a current liability? So obviously one of these is a current asset and one of them is a current liability, and you must decide correctly, and then also which one increases on the debit side and which one increases on the credit side. So that one too, I can't give you any more clues with that one without actually giving you the answer, but hopefully you'll be fine with that one. And then our question 4 is where we've got all the transactions that they've given us. And again, remember, our business is a bookstore. We are a registered VAT vendor. So VAT is applicable to all our, or is included in all our transactions, unless VAT is not applicable because the transaction is 0 rated, exempt, or non-allowable. So in this question, if you go to question 4.1, over here, they tell us that these 4 transactions, only those 4, are cash receipts, and those 4 cash receipts they want us to break down under the accounting equation. Remember, you've done this before for your previous assignment. What is the account name that will be debited? What is the account name, general ledger account name, that will be credited? And then if it's an asset, you must put a plus or a minus in front of the amount to indicate whether the asset, the owner's equity, or the liability amount is increasing or decreasing. So they explain that to you at the top here. Follow those instructions, otherwise you will lose marks. This is for 16 marks. So each one of those transactions is worth 4 marks. And remember, don't forget VAT. If VAT is included in one of these transactions or more of these transactions, then either your input or your output VAT might also have to be debited or credited. So just remember, take that into account. And then for 4.2, with this one, so this was the cash book receipts. With this one here, they want the cash book payments. So they didn't tell you which dates the payments are on. You have to work that out yourself. So you've got to go through all the transactions and correctly identify, by reading them each carefully, which of these would be recorded in the cash book payments journal, and then which ones would be recorded in the petty cash journal. Okay, so that's quite simple. You just have to say here, petty cash, they tell you that's a petty cash voucher, and they told us that we used money from the petty cash box to purchase that. So don't put petty cash transactions in your cash book payments, because even though the company is making a payment, we've got a special journal that we record payments in if the money was taken from the petty cash tin. Okay, does that make sense? So don't confuse petty cash transactions and put them in your cash book payments. Then question 5 is our last one. Excuse me. So here they've given us a cash book receipts of a company, and this line of rand values that they've given us are the month-end totals. You see here under details, they have written the word total. So they haven't given us the details of all the transactions above this that we recorded for the month of March. All they've given us are the totals of each of these columns for the month. Okay. So the first thing that you've got to do is work out what the rand value is that must go in our main bank column for the cash book receipts and for the cash book payments. Okay. So go again to your textbook where they've got, where they first introduced cash book receipts and cash book payments. And on that page where they give you, see if I can find it quickly. I'm looking for the page where they give you the headings, the column headings of your journals. There we go. The structure of the cash book receipts, page 114. You want to go there and read that carefully. that will make sure that you add up the correct amounts, making up A. And if you go to page 116, you've got the structure of the cash book payments. And if you read that carefully, again, it will make sure that you know which amounts to add up to get the correct value for B. So when you've completed that, you will know how much we need to post to the bank account from the cash book receipts for the month of March and how much we need to post to the bank account from the cash book payments for the month of March, because these are our totals. So remember, the other 4 general ledger accounts that they asked us for was bank, trading, inventory, capital, and sales. So we're going to use these 2 bank amounts for the bank T account. We are going to use this sales amount here for our sales T account. We are going to use trading inventory from cash book payments and cost of sales from cash book receipts when we post to our trading inventory T account. And what was the last one? The capital account. In our capital account, let's go over the page. With that T account, they've given us the opening balance. And they are giving us one transaction that was posted to that. And they say, assume that included in the sundry accounts column in our cash book receipts, we recorded a transaction where the owner contributed an additional 60,000 Rand into the bank account of the business. Okay. And in each of these cases, 5.34 and 5, they gave us the opening balance that we must use for each of those 4 T accounts. Okay, guys, so I've tried to give you as much help as I can in this evening session, so I hope it's been helpful. You guys have been very quiet, no more questions. Anybody got anything else that you want to ask me? Anything else? That's great. Thanks, Ulrich. The other guys, has it been helpful for you guys as well? Do you think you're going to find completing the assignment a little bit easier? Okay, perfect. Thanks, Nalini. And no one got any other questions at this stage? Remember, messages, emails, questions at any point. You've got 2 weekends left to complete this assignment. So at any time that you're working on the assignment, let me have a shout if you're stuck with anything, or you're not too sure what they mean by something, or you're not too sure how you should do something. Any question is welcome. Oh, thanks, Nabaseti. You also said it's been helpful. That's great. Thanks, guys. So then I hope to hear from you while you're busy working on your assignment. And then I'll chat to you again in our next collab. And in the next collab, what I'll probably do is go over the answers to this assignment, like I did for your first assignment again, so that you can then see exactly how answers should have looked and what calculations should have been done, which will help you then to understand any questions that you didn't get right. Okay, guys, everybody good? Everybody all good? Okay, awesome. So I'm going to stop the recording here, and then